In today's video, I'm gonna go over my Robinhood portfolio and give you guys my exact plan and strategy to reach $100,000. So my portfolio right now is sitting at $90,000, but before that, don't forget to smash the like button for the YouTube algorithm. And if you guys need some free stocks, links are gonna be in the description. You guys can get 4 free stocks with Webull and 1 free stock with Robinhood if you guys are brand new to investing. But like I said earlier, my Robinhood portfolio is sitting at $90,000, basically under $91,000 right now. On the day, I'm up about $500. And just throughout the entire last 3 years now, I've been doing pretty well in the markets, up total 37%, over almost $25,000 in gains. So now let's go over a few strategies that I've used over the last 3 years to get to this point. So the main one that I've been using so far is dividend investing. Dividend investing is really easy to understand. You buy a company like AT&T, they have a dividend yield of right now 7.13%. With their profits, if they generate a profit every single year, they share some of that with you as an investor with their company. It's a very small percentage, but they're rewarding you for investing in them. So now let's jump into the dividend tracker so I can show you exactly how much I'm earning and just an overview of the entire portfolio here. So this is my dividend tracker. This is Simply Safe Dividends. Links are gonna be in the description. Everybody always asks me for this. So like I said earlier, my portfolio is roughly around $91,000. And my annual income from this portfolio alone is $3,671. I've shown my entire portfolio before, which is a lot more income than this when it comes from the dividends. But on Robinhood alone, this is what it's looking like. So in the month of January, I'm getting around $100 in dividends. In February, I'm gonna see around $260. And in March, high dividend paying month, $550. So in my Robinhood portfolio, I only own 8 companies that are paying me dividends, and I own 3 companies that are growth stocks, which I'll talk about later. So these are the companies that are paying me dividends. The one that's paying me the most right now is ExxonMobil, all the way down to Apple, which is paying me around $16. Nike's paying me around $16. So this is what is making up all of the dividend income from the portfolio. And whenever I receive a dividend, I get to use that as cash. But what I do with the dividends is I reinvest them back into these same companies so they can pay me even more dividends, and that is known as compound interest. Dividend investing is very slow and steady, but over time it'll start to grow faster and faster. So that's the main strategy that I used. This portfolio is gonna grow at a minimum $3,600 every single year from now on, and that's gonna even produce me even more dividend income in the future. So the second strategy that I'm using is not buying penny stocks, is not day trading, is none of that. It's value investing, and this is also another conservative way of investing. So what I'm doing is I'm looking for undervalued companies to buy in, and that could be a dividend company that's paying dividend or a growth company as well, but typically these stocks are just undervalued. And that's what I'm looking for whenever I'm finding any type of stock or any type of investment to buy into. This type of strategy is something I'm borrowing from my real estate investing. So when it comes to my real estate investing strategy, I buy a messed up house, I fix it up, and then I rent it out, and it's worth a lot more than when I bought it for. So this is what I'm doing when it comes to value investing with some of these stocks here. So one of the companies that I'm doing some value investing in is a growth stock, Alibaba. I made a few videos about them now. I'm pretty sure you guys are a little bit sick of hearing about them, but these guys have been beaten down over the last month or two because of, just a lot of bad news from Jack Ma going missing, which is completely untrue. Them getting delisted from America's stock exchanges, which is untrue. One of the big ones was when the Ant Group IPO went, didn't pan out. That one dropped the stock price a lot. But now I think a lot of people are seeing a clearer picture of Alibaba and their future. And a lot of people are thinking Alibaba might be undervalued as well, because today alone, Alibaba is up almost 4%. On the week when I started making Alibaba content and when I started buying into them, it's been up almost 10% now, $22. It's still down on the month. So if any of you guys got in at around $211, you guys are up a lot. But for me, myself, I got in roughly at around $238. I own 20 shares. So this is a big part of my plan to get to over $100,000. Alibaba, in my opinion, from all my research, looking into Morningstar, looking into Finbox, some of my best tools here for valuing companies, they're saying Alibaba is worth roughly $296. So from things I'm seeing, Alibaba should be worth around $300. That's completely my opinion only. All right, this is for entertainment purposes only. All right, so there's a $50 margin from fair value to the price that it is now. So my plan here is to just continue to invest in Alibaba every single week. And this is the one company that I think will help me reach the $100,000 mark the fastest. One of the proven value plays that I've accomplished over the last 6 months was Gap. And when I first bought Gap right now is sitting at $21. So when I first bought Gap, it was around $13. So my average cost right now is $14, but actually is $13. I owned 1,000 shares, and I'm seeing a total return today of almost $8,000. You know, I did a little bit of buying, a little bit of selling. That's why my average cost is a little bit higher. But what I'm trying to say is I'm using the same exact strategy. I'm looking for a undervalued company, and when I bought Gap at this price, it was very undervalued. And using these research tools as well to help me, fair value that Morningstar is saying is at $21. So right now, Gap is at $21. What I can do right now is sell some, take some profit out. And that would be the smart move. But right now, I'm going to wait and see what Kanye West does with his partnership with the Gap. And I think that's going to be a big play to see if Gap continues to rise in value. And the last strategy that I'm planning on using with a very small amount of my portfolio is hype stocks. All right, so I'm looking at different growth companies that everybody is talking about on YouTube, and I'm looking to put a little bit of money into them just to see if the hype is real. I'm not just gonna buy random stocks here. I'm gonna buy some companies that have been around for at least a few years that have a good track record. I'm not gonna be buying penny stocks. You know, I'm not gonna be buying any of those crazy brand new ones that just came out. But, you know, something like Square is right up my alley. They've been doing pretty well, especially with now Bitcoin sitting at what, $35,000. So there's a lot of opportunities with Square, even though they are looking to be a bit overvalued at the moment. That's why I haven't been investing too much money into Square. But you know, Square is definitely a hype stock. My average cost for Square right now is at $160. So total return $1,000. So it's not too bad. I could have invested a lot more, but like I said, I'm pretty conservative when it comes to my investing, and this hype stock investment thing that I want to do, I'm going to be using a little bit of money just to test it out. One last strategy that I want to go over really quickly is the wheel strategy. I talked about this a little bit in my last video, but basically the wheel strategy is a conservative options trading strategy that I've used for the last probably 6 months now. But for whatever reason, right now, I'm making the most premium that I've ever made. So whenever you're doing the wheel strategy, you're basically trying to lower your cost basis on all the stocks that you already own or you plan to own. I've owned Lemonade in my portfolio for months before this, but right now I'm selling cash secured puts with Lemonade, and the premiums that I'm receiving from Lemonade is pretty crazy. So taking a look at this Lemonade sell put here, I have a strike price at $140. Currently, the market value for this is $5.35. So whenever you're doing an options trading contract, it's one contract is worth 100 shares. So you just multiply it by 100. So my break even with this contract is $135.60. Like I said, current price is $5.35. I made a premium, if we take a look at the bottom, I made a premium of $440. So the easiest way that I can explain this to a complete newbie is if the stock price of Lemonade does not fall below $140 by the expiration date of this contract, which is January 22nd, then this contract will expire worthless. And that means I can just keep $440 in premiums with no strings attached. That's all mine, pure profit. But if the price of Lemonade closes below $140, that means I will be assigned to buy 100 shares of Lemonade. So right now, Lemonade is very volatile, but the premiums are amazing. My break-even price, like I said earlier, is $135.60. So there's still a long way to go to get there, but definitely this contract could cost me some money at the end of the day. So I'm doing the exact same thing. I'm running the wheel strategy with Alibaba as well. So I'm buying Alibaba every single week, and I'm doing the wheel strategy with them as well. I'm selling puts here. And my strike price for Alibaba is at $242.50. And currently, like, I'm up a lot on this sell put. So I made a premium of $550 that just went right into the pocket. I reinvested that into more Alibaba shares. and my break even with this one is $237. So since the run up over this day and over the last on Friday as well, this one, I'm total return so far is $430. I'm pretty sure this one is gonna expire worthless, and that's just gonna be all mine. But there's still a few more days in the trading week, so let's see what happens. So in summary, I'm making roughly around $800 in premiums every single week right now. I don't think this is gonna be sustainable forever, so I'm just gonna enjoy it while it lasts. And when it comes to the dividends as well, if we divide that up into a weekly basis, I'm seeing roughly $75 in dividends every single week. So with all that money getting reinvested into the portfolio, and on top of that, I'm roughly investing $1,000 into this portfolio every single week. Just all of that income getting reinvested all the time, it's gonna be impossible for me not to hit 100,000 within the next 2 months, all right? So I'm being very conservative with my numbers. The only way that I don't reach it is if we make a crazy market crash in the next 2 months. But with the way things are going, I'm pretty bullish when it comes to the market right now. So that's my strategy for getting to $100,000. Yes, there's some stuff that's easy to do, like dividend investing, value investing, growth investing, and there's some a little bit more complicated options trading investing. But the only thing that helped me the most is just getting started and consistently investing money into the portfolio. So the one criticism that I get is I don't have $4,000 to invest every single month. I understand. Like when I first started, I only started with $100. You can go back to my first video that I ever made from my Robinhood challenge. All right, so we're coming close to the end. We're almost at 100,000. Consistently investing and learning how to generate more income from your portfolio, that is the name of the game. So if you guys want to watch more from me, go check out these videos here to see what I'm doing. And also don't forget to like, subscribe, hit that notification, get your 4 free stocks from Webull, get your 1 free stock from Robinhood, and join my Patreon if you guys haven't already. That's where I talk with a community of investors just like you, try to learn how to make money in the stock market. And don't forget to follow me on Instagram. Follow me on my second channel, and I'll catch you guys in the next video. Thanks for watching. Bye.